this cycle is going to be probably more dominated by larger pools of capital, so institutions coming in. And then to the extent that we get retail back into the space, probably after fresh new all-time highs, I don't think you're going to see the indiscriminate buying across the board. And I think there's going to be an emphasis on quality. So the things I tend to focus on are Bitcoin, and then
in this market analysis, we bring you a major update from Lyn Alden as she shares her latest insights on the Bitcoin market. In a recent interview on the Eth Sophia channel, Lyn discusses her predictions for the current Bitcoin cycle and how upcoming changes could significantly impact the market. She also covers other key topics that crypto holders and investors should pay attention to. Now let's dive into her perspectives on the market.
You said that the last cycle was in the midst of everything up cycle. I mean, the last crypto cycle was in the midst of everything up cycle, post the high COVID stimulus. And now we're in a different world with higher rates and gradually increasing liquidity instead of having a large jumps in liquidity. How do you see this cycle play out from a liquidity point of view? Bitcoin versus L1 such as Ethereum and Solana versus other altcoins. How can you imagine it?
Good question. So if you back up for a second, the reason that U.S. deficits matter even globally is partially because of how big of an economy the United States is. So when we look around the world for different types of stimulus, the United States, China, the ECB or Japan, these tend to be globally impactful when they make pretty big changes. And so the U.S. deficits, the nothing stops this train meme is not just a U.S. phenomenon. It has global implications. Historically, if the U.S. runs big fiscal deficits but has tight monetary policy, like we saw, for example, in 2022 and 2023, that tends to be, ironically, a strong dollar environment, which can impact a lot of emerging markets and slow them down because they have dollar-denominated debt. On the other hand, if you're running pretty hot fiscal, but then you're also supporting it with monetary weak, like dovishness, that tends to be very stimulative across the board. That's what we saw in 2020 and 2021. And so to get to your question, 2020 and 2021 were kind of like everything up. Like almost every asset is up, whether it's high quality stocks, Bitcoin, altcoins across the board. Everything's basically up in 2020, 2021. What I think characterizes this current and next cycle is a differentiation in quality. So, for example, we've seen a rebounding in a lot of high quality equities, but we've not really seen a rebounding in unprofitable equities. There's not a lot of investor appetite for companies that are not making money in an environment where yields, on a lot of traditional assets are like 4 or 5%. There's actually a cost of capital, and so there's more of an investor preference toward things that are quality. I think what you want to be focused on is in the broad crypto space is things that are actually quality. In this cycle, there has been like a meme cycle, but that's not really new retail coming in. That's like existing kind of PvP entities playing around. And I think that, this cycle is going to be probably more dominated by larger pools of capital, so institutions coming in. And then to the extent that we get retail back into the space, probably after fresh new all-time highs, I don't think you're going to see the indiscriminate buying across the board. And I think there's going to be an emphasis on quality. So the things I tend to focus on are Bitcoin and then stable coins, which are obviously not really investable, but you can look at the rails that they run on and that kind of thing. And real world assets, things that are actually solving problems and expanding markets is how I tend to view the space primarily. I think there's more of an emphasis on not just speculation in this cycle, but on what is actually solving on the ground problems for people in various countries.
Are you saying that you don't expect, Lyn, that we have like the similar type of rallies that we saw like in the last two cycles?
I think it depends on whether or not there's a new tech narrative. So each of those cycles, one was a liquidity cycle. So I've done research showing that the whole space is pretty correlated with measures of global liquidity. So what they tend to have in common, like the the 2017 cycle, even earlier cycles, but let's say the last two cycles, 2017 and 2021, they were positive liquidity cycles. But then also there were tech narratives in the space. So whether it's ICOs, DeFi, NFTs, each one had these kind of like leading narratives that eventually kind of saturated itself. It kind of hit a peak period of speculation, and then eventually kind of subsided and was no longer like the main character narrative. So I think whether or not we get a broader rally in the space will partially depend on whether there's a narrative that's similar in scale to those. And at the current time, I don't really see a narrative like that, other than maybe real world assets, but it's kind of inherently less speculative in a way. Obviously, people can speculate on which rails will win markets like that. People can place their bets accordingly. And even, I mean, stable coins are a type of real world asset, essentially. It's kind of the original real world asset, is taking a dollar and putting it on the blockchain. And so I tend to be focused on those utility questions. And so I probably the people here would be better than me at speculating on the next, say, non-Bitcoin narrative in the broader space. But the thing I would bring from a macro perspective is to say that the monetary and fiscal environment is probably less supportive of speculation in this upcoming cycle, and that it's more differentiating between what is actually solving a problem versus what is not. So you could argue that if spot ETFs came earlier, the last cycle could have been less damaging for people in the space. And then there are pools of capital that, like, for example, they can't even buy like a Bitcoin ETF. They can only buy, like, there are large pools of capital that can only buy stocks, like companies, or can only buy bonds. Right now, the main entity filling that role is MicroStrategy. So if you run a stock fund and you happen to be bullish on either Bitcoin or the space, one of the only avenues they can express that view is either the miners or MicroStrategy. Currently, there's not that many ways for them to express bullishness on the rest of the space. There's not really like that companies that are heavily engaged. Maybe Coinbase is probably the best way they could express that.
The price of Bitcoin increased to about 4% to $97,800 on Friday, bringing its year-to-date gain to nearly 4% since January 1st. 2025 is shaping up to be a pivotal year for the crypto industry. President-elect Donald Trump has promised a more favorable regulatory environment, sparking hope that Congress may pass its first crypto-focused legislation, possibly targeting stablecoins or market structure reforms. Traders are also keeping an eye on new opportunities, including crypto-related IPOs and potential progress on a national strategic Bitcoin reserve. While Bitcoin ended 2024 on a decline after briefly surpassing $100,000, it still recorded a remarkable 120% gain for the year. Many long-term holders took profits, while others sold due to renewed concerns about Federal Reserve interest rate cuts expected in 2025, which added to market uncertainty. If you found this explanation helpful and easy to follow, consider subscribing to our channel.